Bitcoin has seen a massive crash, breaking down from the bearish structure which we've been developing over the last couple weeks. We have now seen over $180 million in liquidations within the last hour alone. The question we're going to be answering today is, what will happen next? Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in to another video. What a crazy day, guys. Bitcoin has seen a phenomenal drop toward the downside, breaking down from that rising wedge formation we had been developing over the last 2.5 to 3 weeks. Of course, this was a bearish structure with decreasing momentum, decreasing velocity, and of course, decreasing volume. A breakdown was inevitable. Whether or not it came now, or we saw one more rally towards the upside, a breakdown was statistically likely based on that market structure. In today's video, we're going to talk about the next move for Bitcoin, what is happening on the larger time frame, how does this change the narrative, what we expect on the short term, and of course our targets. We'll also talk about the broader markets, the DXY, traditional markets, and of course the market data. Now before we get into it, smash the like button, hit the comment button, subscribe to the channel. If you are new here, click that subscribe button, and welcome to all of our new viewers. We did have a video do quite well yesterday, so we probably do have a lot of new guys here. Welcome to the channel, it's great to see you again. Let's go ahead and get into it, guys. We do have a lot to talk about, but we'll quickly go ahead and shout out our Telegram. You can join our Telegram, that is our second link down below. Access to charts, videos, updates, analysis, educational posts, news events, and more. Of course, all of our videos are also posted in here, so you get notifications as they get released. You can join our Telegram channel as our VIP channel here. You can see trade signals, updates, analysis, everything is detailed. We just had a trade over here in ZIL, a 10x leverage short, do really well. We hit over 100, and I think it was 140% profit on that one. Really good to see. You can join up, entries, targets, stop losses, and a exclusive group chat for VIP. Contact us via that free channel in that pinned comment section. You can find all the information. Let's get into it, starting off with the market data for the month currently. Let's refresh the page. We can see, obviously, we're in the red, right? We saw a 0.03% month in Feb, represented by the smallest month-on-month change we've ever seen for Bitcoin in the history of Bitcoin, representing a month of indecision, stagnation, and that printed a doji candle. A doji candle after an explosive move towards the upside generally represents a macro trend shift or a short-term trend shift wherever that candle is printed. In the instance of Bitcoin now in the monthly, we saw a 40% rally followed by that doji candle. So I've already said in yesterday's video, we're likely to see March be a red month, and currently we're down 3.37% with a very strong move toward the downside. Looking at liquidations, we're up 229%. Some of the highest liquidations I've seen since it would have been early Feb, guys. We're at $250 million in liquidations, and volume is not even over 100 billion. 250 million in liquidations and volumes not even 100 billion. That is crazy, guys. Looking at the overall 30 and 60-day period volatility, we're at 2.55 on the 30-day, and on the 60-day, we're at 2.51. Let's go ahead and take a look at the liquidations. We have seen in the last 4 hours, $210 million in liquidations. That accounts for 80% of the total liquidations over the last 24 hours alone, with 97.5% of them being from our long positions. Looking at the charts over here, you can see within that 5-minute candle alone on that initial drop down, we saw $87 million in liquidations, and as you can see, longs absolutely got wrecked. And we've been saying this for a long time, guys. There is no need to get bullish at major resistance. Not only was 25K a horizontal resistance, okay, it represented a 254-day long resistance. Not only was it a resistance there, it was a structural resistance representing the upper resistance level of the rising wedge formation. Not only was it a rising wedge formation, we had the 200 moving average on the weekly as a resistance, okay? We'll show you here. And not only that, we had the Gaussian channel, and we had the 50 EMA on the monthly resistance. We had so many levels of resistance there to be taking massive longs at 25K over 25k to be expecting the price to blast through 25k was purely emotional. Anyone who was saying that was going to happen was purely emotional. They were not looking at the data like we were doing. Trust the charts, guys. The charts are not always right, but they're never going to lie. You're always going to have a better chance when you trust the charts, because trading is about probability. Any singular move you make is irrelevant. It's about the overall net outcome over a multitude of trades or a multitude of decisions. Let's go ahead and look at the broader market. So DXY has seen that break toward upside. Like we said yesterday, we broke this downtrending resistance, and that facilitated a move back into our resistance range. Quite actually surprising to see that DXY hasn't moved much in the last few hours, considering Bitcoin saw a massive move toward the downside, and we'll talk about that in a second. Again, we are still trying to break over that 105 resistance. Unless we are able to break above that, the risk for a retracement is still very present. Moving on to the Dow Jones, we can see we are dropping toward the downside still, hanging on to this $33,000 level. Again, we do expect the price to either do two things. A continuation will occur below this local low towards 32,000. Until then, we are developing a possible bull flag formation, and we could see a rally take us back upwards to 33.5k if the DXY does see that pullback. If it does continue upwards, the downside move is going to occur. Looking at the S&P 500, we are officially out of that rising wedge formation. Again, a breakdown similar to what we've seen on Bitcoin. The breakdown is in progress, the downtrend is active, but we do have temporary support along this bear market resistance, right? This was our bear market resistance. This is our entire bear market at descending expanding wedge. We have now retested that, thus a drop below this trend line will trigger that next move toward the downside, guys. Bond yields have pushed up again, pushing to 4.94 as a high, currently sitting at 4.89. Again, if bond yields do not break over 5 or retest and reject at 5, we could see a pullback in this level, and that would result in the DXY coming down as well. Definitely keep your eyes on that, guys. Let's go ahead and get into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So much to talk about, guys. Bitcoin has seen an incredible pullback on that smaller time frame. This happened within a very small window. You know, this happened within, I think it was about a 15-minute window. We saw a break of the 23,000 level. We saw a break of the uptrending support, which represented that rising wedge support, and an incredibly fast and volatile crash. Let's take a look at this crash. It spanned about 5%, guys. Absolutely insane to see for Bitcoin, and it just goes to show how many people had these sell orders for their longs, these stop losses below 23k. Markets move based on liquidity. When you have a lot of stop losses placed in a certain order and the price liquidates those orders, a whole bunch of cash or money flows into the market and fills the other orders, which allows the price to move very quickly. And we saw that is generally what we see or what we call in this space a liquidation scam wick or a liquidation pump or whatever you want to call. In this instance, we had a lot of stop losses set under 23k. Like we said in yesterday's video, 23,000 was that major trigger level for an incredibly volatile and explosive move. We said a loss of 23k will likely bring back volatility, velocity, and speed in the price action, which is exactly what we have seen. On the smaller time frame, guys, we have seen a retest and support of this small area of support sitting between 22,200 to 22,000. We'll come back and talk about it in a short little bit. But let's talk about the trend direction and where Bitcoin goes. So on the larger time frame, guys, there is absolutely no doubt now that Bitcoin got rejected from 25k. There has now not only been monthly correction from the 50 EMA. There's not only been a weekly rejection from the 200 EMA moving average, but now there has been a structural breakdown from the rising wedge, which developed into the 25K region, confirming a rejection horizontally and structurally. So we have 4 points of confirmation that 25K now has been retested and rejected from on this scale. So we can actually say now with a little more confidence, Bitcoin is in a downtrend from this point. Now, the downtrending resistance, or the downtrending angle which we are on, is in fact this trend line. I'm going to go ahead and draw it in here with the arrow. You can see this is our downtrend, right? This is our downtrending resistance. Therefore, we expect the downtrend to continue, or this current downtrend to continue, until this downtrending resistance breaks and the price can get back above it. However, the uptrending resistance is going to extend further. Therefore, this line here is going to merge into 25K at some point, meaning 25K is still going to be that major trigger for the next move upwards. We could see pullbacks lower. If we break past this point, we could see a rally and then a continuation, or a continuation back down. We'll come back and talk about all of that in a second, just to outline it a little bit. So currently, anything right now, any move toward the upside, any bounce towards the upside, while we remain underneath this trend line, we do have to consider that shorts are going to be more favorable, okay? We are under resistance, we are in a downtrend now, shorts are going to be more favorable. So any sort of rally upwards, any sort of bounce should be looking for shorts, unless we can reclaim and get above this downtrending resistance on the chart. So currently, guys, the next targets for Bitcoin, according to our measured move, we're looking at the first test to the second test. We take the distance between that, we draw it across to our breakdown point. Okay, our breakdown point is actually at an equilibrium to the point of our first test, and therefore our target is going to be that same area over here, that first initial retest. So our maximum drawdown, our absolute max level we can go down to in this downtrend is going to be 18,200 to 19,000. This major area of support is going to be the lowest Bitcoin can go within this downtrending structure, unless it develops a new structure and then expands and continues from there. Now, of course, that is a long way away. So where could Bitcoin go on the shorter time frame? Well, we do have our support here at 22.3K to 22,000. Below that, we have a temporary support once more at 21,800 to 21,500. Now, this is where it gets interesting. If we lose 21,500, our next support is going to be sitting ever so slightly over here, which is quite a weak support range, but below 20,800, guys, we have absolutely no support until 19,200. So what we can say on the chart over here, guys, is volatility in price action is going to start slowing down, okay? We do not expect rapid moves toward the downside again right now. What we expect is slow, drawn-out consolidation toward the downside over the next couple days, unless this trend line can break, which will trigger a move toward the upside. This volatility will start to pick up as Bitcoin approaches and drops below 21,500, and will significantly pick up, and we'll see a massive move toward the downside very quickly if 20,800 breaks. So if you're looking at a larger time frame, looking for shorts on the trigger and loss of 20,700, 20,800, for a target of this lower level, could be a potential future trade you can write down in your notes to keep an eye on the future. Until then, guys, we're looking for bounces, then we're looking for pullbacks and shorts on those pullbacks. And again, if we break over this trend line, then we will flip to our long positions. Let's go ahead and talk about the short term and the macro, and then we'll come back and do our technical analysis. So we'll go back to the macro really quickly. As you can see, we have had that DOWJ candle print. The DOWJ candle, of course, is a bearish candle. It signifies a significant period of indecision, and indecision after aggressive moves signifies weakness, okay? Keep that in mind. When we see a DOWJ candle print, generally it doesn't mean much by itself. When it does mean something is when it prints after a volatile move toward the upside or the downside, because that is when it signifies immense weakness in the trend, and that is what we've seen. So it's very likely March is going to be red, and currently the price of Bitcoin is sitting just around over here. So we're actually already seeing this candle red. We've already got a red candle here, it just hasn't updated. The same goes for the weekly chart here, guys. The 200 moving average did test as a rejection. We haven't been able to close a daily candle within the Gaussian channel, and the price of Bitcoin has now pushed down toward this level over here around 22,200. Not looking amazing. Now, for absolute confirmation of a continuation downwards, we do need to lose the 21,500 to 21,800 level. Until that occurs, a bounce above this trend line is still possible. If we lose this level here, the probability we drop straight to this level becomes about 80%, okay? Unless we remain, whilst we remain above this point, there is still a slight chance, about a 30, probably 35% chance, we do bounce and break back above this trend line for another continuation upwards to retest 23,000, potentially a little bit higher, maybe even 24,000 again. So keep that in mind, guys. If you want absolute confirmation, wait for our horizontal confirmation, which is going to be a loss of our prior low. That would wipe out this entire area, create deviation, and send the price lower with higher degrees of certainty. Let's go ahead and get into that short term. So short-term chart over here, as you can see, we had a long period of consolidation at our 23.8k range. We had this rising ascending support level, which made up that basis of that rising wedge formation. You go ahead and drag this across. We even had this rising channel formation. We were taking shorts, guys. We took shorts here, we took shorts here. We're very, very good position on that. Obviously, Bitcoin price has dropped quite considerably. So let's go ahead and run a few technical analyses on the price action right now. Go into even smaller time frame, talk about the potential for a bounce, and then get back to the higher time frames. So starting on the really small time frame over here, on the 5-minute chart, you can see a significant pullback toward the downside. We're going to go even lower over here to a 1-minute, 3-minute, even 2-minute chart. You can see the price is consolidating against the 50 EMA over here. For any sort of bounce, I'd really like to see a wipe and clear of 22,400. That is going to be a trigger for a move toward the upside. Bring up the VRPV over here, we can see that we did actually clear a very low resistance range, and that resistance range starts to pick up about 23k again. So a break over this level here could potentially be a trigger for a rally back up to about 23,000, where we could reject and come back down. I'll be definitely looking for that. If we do not get above that level there, guys, I'd be looking for continuations downward towards those next targets, which are of course 21,800 to 21,500. So a smaller time frame isn't looking amazing, but again, if we do break this trigger point, I would be looking for a very low risk long, very tight stop loss for a potential gap over here for a move towards the upside, potentially taking profits within this range here. As we can see, the volume has picked up. Our visible range volume profile indicates this area does have an increased amount of orders, and therefore going to be an area of liquidity and a place that price could potentially be attracted and drawn to like a magnet. So moving back to the higher time frame, guys, on the hourly chart, let's go ahead and take a look at some moving averages. As you can see, we did see a lot of volatility, so the price is very spaced out in comparison to our EMAs, and that does suggest, again, volatility has increased as expected. Moving on to a 4-hour chart, we use the same indicator. We can see we had a few rejections from the 50 EMA signifying game weakness, which did end up resulting in a crash. We can see in the 4-hour chart, we are underneath the POC level. The POC level sits now at 23k. If you remember on the short-term time frame, we just said a potential bounce to 23k would be possible. If we do get a bounce to 23k, that would be a really good level to look for shorts again after we've taken that short-term long. So bounce upwards, retest, and continuation back down would be very possible into that next range over here, 21.8 to 21.5. That is exactly what I'd be looking to do now while I play the next couple moves. Moving on from there, guys, let's go ahead and take a look at a few other indicators. Let's take a look at the RSI, guys, and the market cipher B. And I apologize if you can hear any knocking. It looks like there's a builder outside doing something on the next door neighbor, so I apologize if you can hear that. Let's go ahead and take a look at the daily charts. As you can see, guys, we had massive bearish divergence over here. A move toward the downside was very likely. As we say, we have decreasing momentum, decreasing velocity, and decreasing volume. This move toward the downside did execute. The price is now retesting the daily on the 50 EMA. A potential daily close above the 50 EMA would in fact keep this trend up. Okay, we are technically now in a downtrend as we've lost the 50 EMA. A move upwards here and daily close above the 50 EMA from a technical standpoint could keep the trend somewhat strong, and a potential for a rally back upwards to 23k still increases. A daily close with 50 EMA would suggest that midterm trend has actually failed, and we are now moving into a weak or initiated downtrend, guys. Remember, guys, we are now pushing these smaller time frame moving averages down too. If those smaller time frame moving averages cross over the 50 EMA, which is sitting about here, it would signify a strong downtrend. Right now, we are in a weak downtrend according to the moving averages, and again, this is expected as we only just lost that uptrending support line here. Sorry, the first line was actually pathetic. That first line over here, which represents a break toward the downside. Looking at the RSI and moving markers over B here, again, we do have these divergences popping up. Both divergences do represent weakening momentum. We can see momentum has now dropped into the negative, suggesting we have weak momentum, we have negative momentum, and we have a downtrend. So the probability of a macro or higher time frame continuation toward the downside now is very, very likely. I'm going to go ahead and end the video there, guys. I hope you enjoyed. Remember, keep your eyes on the charts. The short term is not looking very good. The larger time frame, we have obviously broken toward the downside. You could potentially get a few nice scalps in on the very small time if you keep an eye on your levels and you trade with very, very tight stop losses. But definitely keep in mind right now, guys, we have rejected from 25k. We have one more leg of support, which is going to sit around 21,500, 21,800. Lose that level, and 19.2 to 18.3 is almost guaranteed. It's incredibly likely. Until we lose that level, do expect the price to start slowing down in velocity and momentum. We'll see a little bit of a grind downwards. We could see a bounce up to 23k, but unless we break over that downtrending resistance over here, we're going to remain in this downtrend, which could potentially take us as low as 18.3k, guys. Remember, on the larger time frames, for us to look any sort of bullish, we need to get that weekly close over the 200. We need to get that monthly close over the 50 EMA, and that will trigger the macro uptrend beginning. Okay, I'm going to see you guys tomorrow. Hope you enjoyed. Catch you later.